hourly chart do you look at? Because I don't know which one I got. I got the 90-day 4 hour, I think, but I don't know if that's the best one to
Okay.
use.
Yeah. So the hourly chart I use basically. I'm gonna show you the list right here. So these are the hourly charts I use. 1 hour, 30-day 1 hour, 90-day 2 hour chart, and then right now it's on a 180-day 4 hour chart, which is my favorite one so far.
Okay,
Yeah,
184 hours.
184 hours is my most favorite one right now. I really do all my examinations on there here lately. So I mean that's what works. And if you ever forget that, I just posted a photo in the album, and it kind of gives you a basis of what time frames to use.
Yeah, I seen that. That's
Yeah.
why. Yeah, I'm gonna start looking at the hourly more.
Yeah. So, if you're looking to hold, 3 days to 20 days, which is basically 4 weeks, um, you want to look at hourly charts for your entries and your examinations. So, like, that's the chart I'm on. As soon as I hop up on my platform, like as soon as I hop on there, it's like up. I don't have anything else up.
Well,
Sometimes I'll
'cause-
go to the daily chart.
yeah.
Sometimes.
Well, because you used to say, you scan when you scanning through the scanner, you just look at using the daily chart, and then when you want to dive deeper, then you do the hourly.
Yeah.
But now you say just do straight up hourly if
Yeah,
you
you
just swing.
Yeah, you can. I look at the daily so I can look at the overall trend. If I need to see where the trend is at, like this right here, the stock that I alerted earlier in the chat room, you can see you can obviously see it's look like a Nike check. No, look like a V, right?
Yeah.
But I don't know where the overall trend is at. So I just want to get a good feel. Okay, where's the overall trend? I go to a 1 year day or a 2 year day, and this stock hasn't been up for that long. So there's really not a lot of history of this stock. It's a new stock, but you can definitely see where the trend is at. It's an uptrend right now. So
Yeah.
that's what helps me. This helps me identify if it's okay to buy, like if it's a good time to buy.
Okay.
I'm looking for dips, like just straight up dips. This right here, this corner, this V looking thing, I want to look for that.
Okay. Well, when you say dips, you just meaning when it bounced off of support, right?
Yeah, when it bases out, the base may
Okay.
be 1 day, the base may be a couple days, couple months, like this right here. I basically look for this right here.
Okay.
Yeah, just a Nike check, bro. Just a curve, and I want to see that base out and then start going up, and then I want to buy. I want to buy somewhere. Um, One thing I was gonna discuss with y'all, I keep getting requests about this tool. It's the Fibonacci. The Fibonacci retracement can help you see where to buy.
Huh.
So you probably can see right here. Basically, my rule of thumb is to buy somewhere above 23%. So this tool you just take from the top, the highest point, and then you take it to the lowest point of the chart,
Mhm.
and you click. And I already have these kind of color coded. So that 38% is like the sweet spot of buying. Like that's exactly where you want to buy. You want to buy right there. But anything above 23% is acceptable. 50% is like that means that the stock is in a strong trend. It is a trend that's happening, or it's a reversal. So
Hmm.
right now, this stock right here, I alerted this stock right above here, and then it went up, and then it dropped, and now it's going back up. Another stock that I traded and I actually lost on this stock. Um, hey Corey, you have some noise in the background.
Oh, okay. Let me
Yeah,
mute my
yeah,
thing.
yeah. Yeah. You unmuted when you ready to talk again. But basically, I played this stock right here, FTR. I played it right in here. You can see where my buy was right here. I took a small position, and I was just testing the breakout. But I seen that it was basing out right here. I seen that on the 180 4-hour chart. I seen it drop down, and then I seen it starting to base out and go back up. So I said, look, I'm gonna buy early this time, and I'm gonna see how it plays out. Well, eventually I ended up selling early. It didn't even hit my stop. I got undisciplined, but it started to go back up. But if you look at the Fibonacci, people ask, do you use the Fibonacci? I'm like, yeah, I use it, but it's not something that I just, use all the time. I use it to check if my buy point is correct. And most times my confirmation price of where I want to buy is usually at the 30% or 23% range. 38% or 23% range. It's right here or right here. And you can see the percentages right there. If you zoom in, let me zoom in for you. You can see the percentages and it'll give you the price. So you may hear me say, hey, price target for entry is at 202. And you like, how did he get 202? It's because I'm using the Fibonacci at that point. Now, you don't probably hear me say that all the time because I don't use it all the time, but it will help everyone find that sweet spot on when to buy, when to identify a confirmation. So you just take it from the top. I'll redo this one. So I bought right here, but I will use the Fibonacci in this point right here. I'll take it from the top of where it fell and find a support at the bottom. And anything above 23% is okay to buy. The higher the dip is, the higher these spread across. So let's just say this fell and you say, hey, I want to buy the dip. You take it from the highest point right here of the dip and then to the lowest point. And you say, all right, I'll look to buy somewhere above 202. And you can buy somewhere up here. Since I bought the stock and alerted it, since then, it has went up. This was at 203 when I bought it. So from 203, 202, it has risen 42%. And that's within 18 days. That's within a whole month. So it has risen. And that tool kind of helps you see, okay, I can buy right here, or I can buy above 23%. You can color code it. You can change it. You can edit this property. And you can put, okay, if anything above, 23% is good, then I'm going to set, this to be, purple, or, this can be orange as it's getting hot or something, or you can leave it just like how it is, but those points of 23% is actually okay to buy above that. 38% is the sweet spot of where I want to buy. Also, these things can act as a resistance too. So if you see these are different points of the stock where it's touched and it's fell down, or it's touched and it's bounced back up, so many different points. So this can help you see those hitting resistance points, or kind of give you that confirmation. Where do I buy once it starts dipping? Where's my confirmation? Well, if you take the Fibonacci tool, you start from the top and then you go to the bottom of the dip, then you can say, okay, I can see myself buying above 197. I really like to buy at 202 for a great confirmation. But if I want to get in early, I can get in at 197 or above and take my chances and then set my stop. The closer you are to the support of your buy, when you buy, the closer you buy to the support, the better chances is that if you do take a loss, it will be small. So I say get as close as possible. If you are really risky like me, you wanna buy right above the 20% mark. This Fibonacci line right here, you want to buy above this because you can set your stop right below here, and if it does fall and get you out, the stop, it's tight. It's tight as possible. The Fibonacci tool, it just helps you recognize, okay, where do I buy? What are the resistance and supports? If you get stopped out, you get stopped out, but it's like a small loss. But if you're right, you can let that thing ride up, or you can take your 10% and get out, then you do that. So those are some tools. The 180 chart is what I do this on. I do all my analysis on the 180 chart because it gives me that more definite, defined clear picture. Does that make sense?
Yeah, it do. It do.
If it don't, say, hey, bro, you ain't make no sense. I can explain it in a different way.
Well, I was wondering why you hadn't really promoted it yet up until now. Is
Yeah,
it just not as effective, or?
it is. It is effective. I just find myself not using it because when you use something over and over and you kind of get the hang of it, sometimes you stop using it as much, if that makes sense. It's kind of like I eyeball it,
Okay.
which is, it can be good and bad thing. It's kind of those habits you develop when things are going really good and you develop those habits like I really don't need it no more. I can kind of see it. I don't know. It's kind of like a weed man. He gramming he packaging all these grams, right? And I know you probably I don't know. I bought weed before where 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 weed man probably I bought and say, you know what, this is a gram. And he probably give you 1.1 or 1.3, but effectively it's a gram. And then sometimes you got to check it to make sure it's a gram because some people like to get over on you. I don't know. I'm just saying. It's kind of like that quarterback. He's seen his receiver run the route so much. Tom Brady's able to get the ball on a dime right to his receiver right after he get out his break.
Are you talking about Edelman?
Yeah, Edelman. So it's the same thing with like pitchers. They got that rhythm of throwing the ball where they can throw that sweet spot, and they don't really need that mechanical thing. They can kind of mix and match and say, I'm gonna do my own thing, kind of style it. And that's where I got to. I use it so many times. I'm like, okay, this is a buy point, or this is the point of where I can buy, and that's a great confirmation that this stock can rally. And this stock did rally. Now I lost on the stock, but this is a lesson learned for me. Like, okay, maybe now I need to promote it because those habits can turn into bad things. Where, okay, I need to be more technical. I need to be more detailed and get back to the basics because this tool works. I've used it. It's just I bought super early, and when I bought early, it was great. It went up, it went down. My stop was below here, and so I was like, this stock is not moving. I seen that it was in a downtrend, and I seen like, all right, if it can't get past this and it's downtrending, well, I don't think it's gonna try to get above that. And so maybe I'm wrong. And so I second guessed myself, and I end up getting out early. And I'm like, okay, I need to go ahead and get out and let that thing ride. I was testing it out, buying early, buying right at the dip, and buying downtrends essentially. I wanted to see how it would work out. This actually did work out in my favor. I just didn't get the reward from it, but I got the lesson learned, and now I can get more technical, use the Fibonacci, and that's why I wanted to cover it tonight and promote it because that bad habit of eyeballing, yeah, bro, I'm giving people 0.8s instead of a whole gram. So I don't want to do that. I want to make sure everybody get the gram that they deserve. That makes sense.
Yeah, I mean that's a pretty good analogy right there.
Yeah, don't judge me, y'all.
Yeah.
Don't judge me. I know I've been there. I've smoked weed. I've bought it. I've sold it before. I've did all types of dumb things. So that's me being transparent. Me being real.
Yeah, that's how you got to do it.
For
So I'm
sure.
trying to. One thing I do want to ask is like, when you say the hourly chart is more detailed, like what do you really mean when you saying that? Because like,
You
are you
get
saying just meaning more candlesticks? Is that
yeah,
basically?
you get
Okay.
more candlesticks. So let's go to if we had 180, then let's go to 9 month. No, let's go to 6 month. It just gives you daily charts. Now, if you go to the 180 day, 180 days,
Right.
it gives you more of a, I don't
Okay.
know. Yeah,
It breaks it down more.
it breaks it down
It's still
more.
the same information. It's just
Still, yeah, you can see it. And even with the 4 hour, I mean, the 90-day 2 hour, it's way more defined. It gives you more. It's going to show you 4 candlesticks for one day
Okay.
because it's an 8-hour day. So with the 4 hour, it's giving you 2 candlesticks for the day, and I like that. I like seeing that because it lets me know, okay, so this stock today, like if we look at it today, we can see where during the day of the opening, it was up here and it had a panic, and it tried to get back up, and then at the end of the day, it couldn't get back up, and it started going back down again, and now in aftermarket, it's going down. I can see that. So if I needed to see the details of the day, I can see that too. And then also the time frame. The time frame is more short. It's straight to the point. This is what the stock is currently doing now. Instead of if you look at a daily chart of 3 years, it's like, okay, I really can't see that. Or if you go to one year day, it's like, okay, I can see it dipping, but where's my entry? Where's my entry going to be for the day? And if I want to see that for the day, and I like to see that stocks have that last green candlestick, that bullish candlestick at the end of the day, that lets me know, okay, this stock is going to close green. That means people are bullish about this. So there's buyers. I want buyers. I want to be with the other buyers. I don't want to be with the shorters. They want the stock to keep going down.
Exactly.
Yeah.
Now, what do you think about the max chart? I was kind of looking at that for a while just to kind of see what the overall, has it done in the whole life of the stock. I thought that one was kind of interesting. Like, you know what I'm talking about?
Yeah. You're talking about max available.
Yeah.
You can use daily. What do you use? Weekly?
I usually do it just a day, but
Just a day?
I guess you could do anything really.
Yeah, like you can see the overall perspective of the whole company and what it's done before. I don't know who your internet service is, but I actually have Frontier right now for my internet. So this is a company that I'm actually using in real life. um, and from this standpoint, like, yeah, I can see what this stock has done overall. Like it's traded in the $100 range, which is
Before, yeah.
which is great. This was 2014, so it's not too long ago where it was trading in the that range. So I'm like, okay, could the stock get back there? Yeah, but I just want a short-term gain, so I'm gonna look at a short-term time frame.
Okay.
And
Yeah.
I don't want to hold it that long. Now, if I was looking to hold for a year, I'll look at the max chart and I'll look at the weekly chart. And that's when we go back to the time frames. What is your participation like? What is your holding time? When are you looking to sell? And so if you look into day trade it, you'll look at the minute chart. 10-minute, 5-minute, 1 minute. I've seen all types of stuff. Swing traders, you want to look at the hourly charts. That's what you want to look at, and you want to have short time frames because you want to see what it's doing now. Is it dipping right now? Could you sell in 2 weeks? Bet. If you're looking to hold for weeks to months, you can even look at daily. So swing traders, these two kind of correlate with each other. Remember, Ben type of trading right here. This is what he trades. He holds for weeks and months. He doesn't hold for longer than a year. He's not a long-term investor, but he does hold for weeks to months. So this is his chart right here. He looks at the daily. Now, if you long term, even if you are intermediate, sometimes you look at weekly just to see the overall perspective. But usually long-term investors are holding over 365 days. So they holding for a year or more.
Okay.
Yeah. I mean, what time frames? So you've been using what time frames?
I mean, I was like, when I'm scanning through this, looking at different stocks on the scanner, I'll just be on the daily chart. But then I started more trying to look at the hourly chart.
Yeah.
But I thought the hourly chart was like a little bit more choppy, but I guess that's probably what you want to see, is a little bit more, like more candlesticks, I guess.
Yeah.
So I just had to get used to looking at the hourly chart. I'm gonna start looking at it more. But I
Yeah.
just seen that picture today where you broke out, like, depending on your how long you're gonna hold it. That's what chart you need to look at. So
Exactly.
I'm gonna
Exactly.
start You just get used to looking at the hourly.
Okay. Yeah, that's going to be helpful if you do decide to go ahead and you want to hold for that long, or if you want to go to weeks and months. You'll always have this to see. Okay, what charts do I need to be looking at? What's fundamentally sound for me to look at when it's time to make that trade or investment.
I mean, yeah, well, for these stocks, though, I just wouldn't think you would want to hold them very long with this price range that we're trading in. I
Yeah,
wouldn't I
yeah.
wouldn't think, but I don't know.
Now, and that's another point. I'm glad you brought that up, Corey, because yeah, when it comes to small cap stocks, I don't look to hold them that long. But like I've been looking at the mid cap, bro, and the mid cap scanner. I mean, these stocks are very like solid. These are solid companies, and these stocks, like I will look to hold for weeks and months at a time. Like I'll hold a stock for 2 months with these type of companies, and I've been adding them to the watch list, so everybody can see like what company that I have now. This company right here. This is the mid cap stock.
Okay.
These are anything above 2 billion.
Okay. Okay.
Yeah, anything above 2 billion.
So
That's
that's like $8, $9 on average, and $10. What like
yeah. Usually,
typical price?
usually these stocks would range above $10.
Okay.
There's some cases where you may find it a stock that's lower, but usually 9 times out of 10,
$10.
it's going to be above. Yeah, it's because it's going to be a solid company. These
Yeah.
stocks don't really trade that low. Now you may see like J.C. Penney's used to be a mid cap company, and they're not no more. So that's okay. They're just not. And J.C. Penney is a penny stock, so they didn't used to be a penny stock, but J.C. Penney is also a retail company, and you can see where that's been going with Sears and Toys R Us. Those companies going bankrupt, and what's the other company?
Sears. Well, Sears already bankrupt,
Yeah,
but
Sears, Toys R Us, and then Radio Shack. So
yeah, Radio Shack.
those retail's been out of business because you got Amazon, you got online shopping, you got online pickup. So you don't really need a retail store. You can shop from your mobile phone and pick it up somewhere or get it shipped directly to you. So those companies. So with mid cap companies, I'm looking at them from a technical analysis standpoint, but I do want to incorporate the fundamental analysis too. Looking at the reports, SEC filings. Somebody asked a question earlier. I don't know if it was yesterday or today, but they asked, what are some of the websites like Alpha, Seeking Alpha. Seeking Alpha is a website where you can look at fundamental news. You can look at fundamental reports. Fundamental analysis is basically looking at the financial data of the company. How has it increased every quarter? Has the company's profits increased? Are they growing as a company? Not really. What does the chart look like? You know what I'm saying? So mid cap is, you can do technical, but I'm learning that you might want to incorporate some fundamental analysis. I used to do that with penny stocks, but I've quickly found out that penny stocks can move on just anything. It doesn't matter if everybody's talking about the stock on Twitter, then people will start trading it with penny stocks. So
Okay.
yeah.
Yeah. Fundamental analysis.
Yeah. Yeah, it's actually a video in the course on fundamental analysis. I think I took it out though. But if you do want to look at it, I can post something in the chat right now. And you can look at basically how to do fundamental analysis. You can go to Yahoo. Matter of fact, let me go
Yahoo
to
Finance or
yeah,
something.
you can go to Yahoo Finance. And what's that company? I don't know how to pronounce that. Huya. That's how I look. HUYA. and you can look at the historic data. You can look at the PE ratio, price to earnings ratio, the bid, the ask. We look at stuff like the volume, but you can look at the statistics. You can look at the float. You can look at the percentage of, how many institutional investors hold shares of the company. You can look at the profit margin, return on assets, the revenue, the yearly revenue, quarterly revenue growth, which is important with fundamental investments. But it doesn't take long. It may take you 2-3 hours to really like do some fundamental analysis on let's just say you have 10 stocks, but for each stock, you just do the analysis and you see, okay, this is where the company's been doing. This is the historical growth. These are the new products. You can look at the SEC filings where you can see their public release statements from their lawyers saying what they're really doing. That's the news before it hits the news. And I like to use Seeking Alpha for that. Show you what that is right here. Because I used to look at you can do that for penny stocks. Look at the SEC filings of the stock. And then if they're talking about a product release or a company merger or they got a new CFO, that stuff can make stocks move because people get excited, emotional buyers. This is looking for SEC filings. They change this stuff up every year. So you can look at the evaluation of the company, performance metric. So it gives you the whole scope of the company. You basically, from key data, you can look at the SEC filings right here, and you can see what's going on, like SKs, 8Ks, 10Ks, 10Qs. Basically, anything with ownership or, they're registering a new partner mergers. All this stuff is publicized here first before it actually releases to the public news. They have to do this because it is the SEC rule and regulation that each company that is public has to release statements to their investors before it actually goes to public news. The people who publish the public news are actually media agencies, media companies, but the company actually has to release the statements and the SEC gives it to public use. But not everybody goes and look at this information. So reading that will help you see, all right, this is this company is doing an 8K. So now they're looking at doing a transactional merger with a bigger company, and this is what's going to take place. I don't read into the whole statements, but all that spells to me is you getting bought out by a bigger company, which is probably the best thing. What is this going to do for people? Is this going to get people to buy? Absolutely. They're just like Apple buying some tech company you never heard of, but they're a good company. They make money. They're just not big as Apple. For that company stock is going to shoot through the roof. Like off the rip, it's going to shoot through the roof because people are like, oh, this company Apple bought this company. Apple's a big name. That means that it's going to attract attention. Stocks need attention. If they don't have attention, nobody's going to buy. And when people actually have their attention on the stock, it needs to look somewhat good or somewhat healthy over the time. And that's where your fundamental analysis comes out to play. So that's your fundamental side. I had to break that down. I haven't used it in so long.
Yes, I mean, you would think that would be more for long-term investors, more of the fundamental.
Intermediate, long-term. The only reason I've used it for penny stocks was for mergers, acquisition mergers where big companies buying out another company, and then product released. So they do a product release statement where there's a statement of a new product or something that they're doing, like medical companies. I used to use it for clinical trials. So let's just say we were testing out a new medicine that was supposedly supposed to cure cancer, and it's gotten to the third trial, which means that it's going to go to the fourth and last trial, and the FDA approves it. So if they release the third clinical trial to their investors, they release that statement saying, hey, we passed our third clinical trial, and it's in the SEC filings. It hasn't been a public news release yet. You can buy early. And then when the public news comes out, you're already in the stock. You already have the shares. And then when everybody else hears about it, they get the buying. That jumps the price up. You're already in it and you sell. So that method is called buy the rumor, sell the hype. So you buy the rumor. The rumor is the SEC filings. Oh, okay, we passed a third clinical trial. And then once the hype comes, when everybody gets excited, when the public news release comes out, then you sell it because you already got shares at the bottom. And that's kind of that's the way to beat and get ahead of the game. I used to use it for penny stocks. I just don't really trade penny stocks like that. I trade larger companies, but I still do dip and dab in penny stocks, just like you seen on Kaylee. Penny stocks is just, it doesn't have, it's good for volatility, but for substance and actual something to really, invest. If you're talking about investing, penny stocks is not for investing. It's not really for buy and hold. It's for buy and sell real fast, or you might lose all your money. Yeah. So small cap, mid cap, things I'm focusing on right now as I mature as a trader and an investor. I'm wanting to incorporate some fundamentals back into my trading method because it helps, and it gives you that. It gives you a kind of a like, okay, I'm making money. This is why. It's not just technical. It's also fundamental, and you kind of feel more of an investor than you do just a trader or a penny stock trader. You feel like, okay, I'm really making investments. It's kind of like a real estate deal. Real estate deals may take weeks and months at a time. It's kind of like that. You hold the stock for weeks and months, and then you cash out.
So are you in anything right now? Like any stocks?
Yeah. So right now I am in, what is this company called? I'm in Kaylee.
Okay.
Yeah. Right here, testing out buying early, right close to the dip. And I've just been holding. I'm waiting for it to spike up. So about around here, and I just been waiting for this thing to spike up. And I can feel myself getting impatient, honestly, because I'm used to buying and probably holding for 2 days or 3 days, 4 days, and boom. But I'm getting more into like letting it hold out. This is a penny stock though, so I don't like holding penny stocks that long. But I know how big they spike. And so this stock recently just spiked. Within 90 days, it spiked like super high. And it's had small spikes around the support 4 times. See that?
Yeah. Where it touched it and then it went up.
Went up. And I'm waiting for it to really pop off right here and take off. I'm wanting it to take off. And that'll be a big winning percentage that I'm, essentially looking for. But selling before the resistance up here, I mean, I can go use the Fibonacci so you can see it. So selling before 100%, if you want to measure that at 10:07, that is 40% return on a really small position. Just testing this theory of buying right at the dip and setting your stop and letting it ride out, getting more into like really getting in the rhythm of holding for a longer time and letting those things spike. And because I'm just so used to buying, and then I see it pops off next 2-3 days, and then it reaches my goal or even more, and then I sell, which is great, but setting that stop low is kind of risky. So I want to set my stop tight as I can, because let's say 3 times out of those 4 times I make 4 trades in a month. If it doesn't work out, my stop is really tight. If I buy right close to the support, it's super tight. But if I don't buy close to the support, my stop is low and I can take a big chunk loss. But if I win big, if it does do what I think it can, then that's a big win right there. And then if I had 3 losses and 1 big win, I profit more than I lose. And that's the concept that I'm going for. I want to continue to practice that concept because I preach it. So I got to continue to practice it.
Okay. How long have you had it so far? Like, how long have you been holding it?
This day was
the 12th.
This is the 12th.
So it's been.
Yeah, so this is the 12th. So it's been 6 business days.
Okay.
So 5, 6 business days that I've been holding this thing. Wish me luck. It touched again today. It touched close to the support. I don't know what it's going to do tomorrow, but I seen that in history, it's done that before it started spiking big, which was right here. It was basing out for a while. It dipped close to the support again, and then it just rose up. I'm trying to catch that wave, man. But the reason I like this stock was because that it recently went big time. And I love that. Like this right here, this was 10 days. This was showing as, this was 10 days. 10 days and 913%. Yeah, I did say that correctly, Corey. 913%. Corey's like, hold on, that's super big. But yeah, that's what I'm looking at doing. I want to catch one of these. Yeah.
Oh, sorry. You can go ahead.
No, go ahead.
No, I was just gonna say it's interesting that you got in it because when you entered it, the volume wasn't particularly high.
That's why it's a test. It's
okay.
Just testing it out, bro. Just testing it out and doing something different because I don't know. I'm being innovative at the moment.
Yeah, trying to come up with new
ways, new methods.
Yeah.
So if you look at the daily chart, this is a non-highlighted green candle. It's green candlestick, but it's technically red on this day because it was lower than this day. But it was green on the day. Not a lot of volume, but it was a lot of volume, but it wasn't. It was 15 million, but it's a penny stock. It's a true penny stock. So 15 million is like, okay, it wasn't above 30 million, which is above the average, which it did this day, these 2 days right here. So it had a green day right here, but it hasn't spiked yet. And I'm just kind of waiting it out, trying to see when it's going to spike. If not, I'll just take my loss. But this is currently what I'm testing out, and that's why I'm taking small positions, test it out with real money, see how it really works. And if I can keep replicating this, I'll just go ahead and say, hey, buy right at the support. Look for these stocks. Use the Fibonacci. Look for now. If this did have some fundamental analysis to it, that'd be something else. News did come out on the stock today. It did come out on the stock today about an 8% growth in its operations. They released a new e-commerce business. So that came out today.
That's a good thing. That probably gonna help you out.
Exactly. And the company reported $233,000 in revenue, which is okay. That sounds like more of a startup company. So that's really good. I like it. I like good news. So now basically buying the rumor, selling the hype. waiting for this thing to spike. If it doesn't spike, it drops, I'll get out. But waiting for this thing to spike up, I'll sell. And that's kind of your buy hold method. That is the buy hold method. Not kind of, but that is. And that's the hardest thing. Hardest thing for me, Corey, is that I used to be very good at patience, but the more and more that I've been trading, I've kind of got babied, or I'm a privileged trader because I traded in those times where stocks spike the next day and they just keep running up, and it's like 10, 20 different plays. And I've traded in the hard markets, and I was still able to find those stocks. But after this big fall that happened in October of last year, it's just now it's like, okay, I can't be spoiled anymore. I gotta really do my due diligence. I can't just find a stock that's dipping and then the market's so good, so it's going to spike 10% or 20% in the next 3 or 4 days. It just doesn't happen like that no more. So I gotta evolve with it. And this is why we having these masterminds, so we can stay up to date with the market. The market changing, man. It really is. And you either gonna be a winner or a loser. And I ain't trying to lose.
Exactly.
Yeah.
I feel like I've been hogging it. I don't know if I already have any questions or what. I feel like I've just been hogging the show here.
All right, you got questions? You know it all? Or you got some ideas? Trading ideas?
Give me a stock idea or something.
I don't know it all, but I don't have any questions,
Okay.
honestly. Yeah.
You got any plays for me? Give me some tips.
Honestly, I haven't been looking at the stock market this week. So,
okay.
Yeah.
All right, I appreciate the honesty.
Slacking,
I appreciate the honesty. It's all good.
Yeah.
We won't beat you up too bad. It's okay.
Shoot.
I mean, believe me, I hear it all the time.
Okay, that's cool. That's cool. So, Ronnie, I guess to close it out, give me your top 3 stocks right now that you would say is looking good for you.
Bet. Let's go ahead and take a look. Let's take a quick look. Huya. This is one that's I know I'm saying it wrong, but HUYA. I like the stock. It dropped down. It's in the one. We're looking at the 180 daily 4-hourly chart, but it's 180 days. You see, it based out right around. Let me use my tool. It based out right around here. I like this base right here. And now it's starting to go back up. And then I seen that it went up, and now it's kind of giving a consolidation. So you can say this may be a long flag right here. Long little flag right here. And I'm thinking that it's going to rally again, and it's going to continue this uptrend. This stock is a mid-cap stock. So, the holding time may be, 2 weeks to 4 weeks. That's top on my list. Another one is right here. I showed y'all this in the beginning. Nike Check. It's really hot right now. So it just had a spike. Now it's been really consolidating back and forth. It's been dipping right here. It's kind of consolidating, and it's spiking again. So thinking that's great buy range for this stock is right now, actually. So I may take a position tomorrow or at the end of this week. I may. I have to kind of look at where I would like to buy. If I was doing a high point, right now it's like, okay, this is in a strong trend right now, so I can buy, but not sure where I want to buy. I don't know if it's going to drop tomorrow. I would like to see that. I would like to see a drop so I can get a better price and then go back up. That is the 3. I alerted this. This is done. This is close to the resistance. So I don't want to buy it close to the resistance no more. I don't want to look at that stock. This one, GG, is in a strong uptrend right now. So it's showing above 50% on the Fibonacci. And I think that This is a good long-term buy. What I mean long-term, not long-term investing, but holding for weeks to a month until it can reach back up to this range. This right here, honestly, this is super dangerous. So these two right here that I named out, that's top. But this one also, I called this one out, and it went up super high, and it fell dramatically, but volume just rose again, and I wasn't expecting that. So if it can get above 120, I would consider doing like an overnight trade where I'm holding overnight because this thing just spiked high and it just fell super low. So if it can get above 120 and it can close out tomorrow above 120, it may be a possibility to buy it before the close tomorrow. And then the idea is to sell it in the morning for the morning spike because it happens, or the morning gap. So look out for that. It just had 10 million shares traded today. So that's hot on my list. These three right here, HUYASTNE, and then you have SHLDQ. So those are my top three. I like this one too. I talked about this in the stock, but it's choppy. So,
Man.
It's not top. That's why I didn't put it at my top three. You asked for my top three, but it's choppy. I'm really doing my research on this stock. This is not even a true penny stock yet, but I'm just watching it. So these are my top three right here.
Okay, cool. All right, well, that's all I got. I think this was pretty informative, though. You put some good information in this one, so if everybody play it back, they'll be able to get some good stuff out of this one.
Yeah, for sure. That's why I wanted to do more of the mastermind. I want to keep doing this, and I mean, doing it for an hour and 30. Last time you were in it last time, right?
Yeah.
And that lasted 2 hours, and I want to keep it more informative, more back and forth, because I think that's going to help us grow as a unit. And now that this is not only just for VIP members like yourself, this is also for standard members having more ideas. And I'm wanting to get everybody involved, but everybody has crazy schedules. So Sam did, I think she mentioned that. No, Kyler mentioned to think about the time frame. Because everybody's schedule does change throughout the year, just like stocks. So 8 p.m. may be the go-to, but I don't like to do it too late because people's brain is, shutting down.
Yeah. And plus, I don't know if Sam like to stay up that late. But I might be wrong, but I don't think she.
I hope Sam sees this because Sam is old, so she don't like to stay.
I didn't say all that. You said that.
Look what you doing. Okay. Nah. I'll take the blame. I ain't tripping. But
nah.
That's all I got.
Okay, cool.
All right, you got anything? Anybody else? No? All right. I think we good for tonight then. I appreciate you joining, man. Next week, I'm supposed to do a special. Remember the overnight strategy? I'm supposed to do a special thing. So next week, I will be doing a video on that.
Yeah, you're going to put it in the video library, right?
Yeah, I'm supposed to put it in the video library, but Kyler is pushing that I do a live webinar. So
okay.
Hasn't been approved yet. I'm just not sure if I'm going to get everybody participation. So he wants to be determined. He wants to do a live webinar during the market, and I don't know. I don't know if everybody's going to participate because everybody has work. So
yeah, exactly. Yeah, a lot of people are going to be at work, but
we'll see though. We'll see.
Yeah, even if you get a couple people in there though, they can do it.
Yeah, we'll see. But you got anything else? Anybody? Nope.
No. I think we covered a good amount of material in this one.
All right. Well, that's all I got, man. Y'all have a good night.
All right. Have a good one.
All right. Peace.